Hello everyone and welcome to this technical analysis video here at xm.com. We don't have any major central bank decisions on this week's agenda, but we do get several data that could well affect monetary policy expectations. Among those data are the Eurozone CPIs, Japan's Tokyo CPIs, and from the US we get the core PCE index, which is the Fed's favorite inflation metric. But let's get the ball rolling with Eurozone's data. Inflation in the euro area is expected to have slowed further, which could prompt market participants to somewhat scale back their hike bets. However, with the ECB well signaling that more rate hikes are on the table, any setback in the euro due to a potential slowdown in inflation is unlikely to trigger a major trend reversal. For example, we saw euro dollar coming under some selling interest on Thursday and Friday. That decline could continue if the CPIs reveal that inflation in the euro area slowed further, but we can see that the pair could find strong support near this uptrend line. A potential rebound from this uptrend line could aim for another test near the 110.10 zone, marked by Thursday's high. Break higher could target the 110.95 zone, marked by the highs of April 26th and May 3rd, the break of which could carry obviously larger bullish implications and perhaps pave the way for the highs of January and February 2022 at around 114.85. Now, for the outlook to turn to bearish, I believe that we would need to see a break below the 106.65 zone, which offered strong support here at the beginning of June. If we see such a break, the pair will already be below the uptrend line, and a forthcoming lower low will also be confirmed. An initial support could be found at 105.25, the break of which could carry bearish extensions towards the low of November 30th at around 102.85. Now, the next item on the agenda is Japan's Tokyo CPIs, the next item we will discuss. Eurozone CPIs are coming out on Friday. Tokyo CPIs are also coming out on Friday during the Asian session before the euro area CPIs. The forecast here is for the headline rate to have risen to 3.8% year over year from 3.2%, but the core Tokyo CPI rate is expected to have risen to only 3.3% from 3.2%. Now, in my opinion, this is unlikely to alter much speculation around the Bank of Japan's policy, and this is because the Bank of Japan has repeatedly signaled that it will continue with its current ultra loose monetary policy settings. So the yen may be destined to continue sliding, especially against the pound, because the Bank of England is expected to raise rates by another 120 basis points according to market expectations. So GBPJPY may be destined to continue trending north. We saw the pair finding support recently at the round number of 180, rebounding, and now the door may be open for the pair to climb towards the 188 zone, marked by the highs of the summer of 2015. We see that the trend is to the upside, higher highs and higher lows above this uptrend line drawn from the low of March 24th. Also, the pair is above all three of our exponential moving averages. So for the outlook to change, I believe that not only a break below this uptrend line is needed, but also a break below 174.60. Such a break could pave the way towards the 171.20 zone, marked by those lows here, the break of which could see scope for extensions towards the low of May 11th at around 167.70. Now the last pair I want to discuss is dollar CAD. The reason I want to discuss this pair is that it will affect it not only from the core PCE data, which comes out on Friday as well, but also from the Canadian CPIs that are due to be released tomorrow on Tuesday. So we will have some early action for this pair. We see that the pair fell below the 132.30 zone, which is the lower bound of this sideways range that has been containing the price action since October or November 2022. So the break below that zone makes me believe that we could have some further declines, but that uptrend line here could provide initial support for the outlook to turn more bearish. I believe we need to see a break below the 129.55 zone, marked by this low here, the break of which could set the stage for decline towards the next support, marked by the low here at 127.25. Now, in case we get a rebound and a return back above 132.30, this will signal that the outlook has turned neutral again and not bullish, because we will be back within this sideways range. I believe that for the outlook to turn bullish, a break above the upper bound of the range of 136.50 may be needed. We will have a clear higher high and perhaps initial extensions towards the 138.10 zone. So that's it from me. Thank you very much for watching and listening. I hope you have a great day.